Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So BTC got a little bit of a bounce off that daily support structure that we've had up here for days and days, and it looks like they also met with a little bit of resistance at the next daily support resistance level slash 0.5 equilibrium mean reversion path to the upside of this pitch fan we've had since January on the charts. And we didn't even make it up to the point of control of the second line at 30,270. Let's see why that is. Let's go into the liquidity straight away of high block capital. What is high block? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those people are for a nominal fee per month, and that's why you should consider hitting that like button and subscribing if you want to see more. So go ahead and go into the 1 minute time frame here. So last night we were seeing this double bottom idea. We did not call this bottom. We were seeing that they could potentially go lower. However, we did say that they'd most likely come back to that what was that pool up there, that 29,111 $264 million pool, which was also stacked with these other 100x pools at 29,158, and they came back to that with the fury and then some.
Fatality.
And they also ended up going the entire way, all the way up to their partners in crime up at 29,839, and at the very tippy top at 30,039, and they sharply reversed into the liquidity down below of the 100 extra longs that thought we were going to 32K and beyond.
Fatality.
And that's what happens if you don't reward yourself. Bitcoin's a bit eating on both sides these days, and it still stands to go lower as there is still $3.5 billion imbalance to the downside, and the shorts are scared to enter here, so they get the best of both worlds. They get to eat the shorts and keep them from entering while they eat the longs. It's a cruel game out there if you don't reward yourself and take the levels, key levels, for what they're worth. I'm kicking myself for not taking the potential trade of this up to this region, being asleep at the time. But there's always another trade and there's always another setup. So let's go take a look at what's setting up for today. So we had this ambiguity express itself now, and it looks like the imbalance that was taken up here is now starting to present an imbalance down at 28.4 on the 7-day time frame. We could continue down into this region. However, we're now starting to get liquidity up in the 35K range. Quite interesting to note. We never had that coming before July, so now we're starting to see liquidity enter up in that region. Let's go to the monthly time frame. Shout out to everyone here. Later on, we're going to go into what we did in NASDAQ just an hour ago and why we're changing the streaming time just a little bit to do with this type of update of both, because they're both equally fun to trade. So if we look at the monthly time frame, there is this imbalance still to the downside at 28.2. The 12 billion is still there. The 10 billion is still there at 28.1. So this setup is still valid in my book, because we're back to where we started yesterday, essentially. And if we look at the 28,100, basically you got $40 billion down to 28.1 on the monthly time frame, and you cleared that imbalance of the shorts, so it's a nice little setup to continue lower, if I do say so myself. And if we go to the 3-month time frame, let's go ahead and see what we do in the charts here. They came up into that liquidity and got about a $24 billion pool, and then now they're heading back down potentially to grab the 21 and 29 billion on the 3-month time frame. And if you add these all up, you got 30, 40, 50, 60, 70 billion dollars down there at the 28 region on the 3-month time frame. Let's go to the 6-month. On the 6-month time frame, you got 39 billion at 28.2 and 35 billion at 27.9. So that whole 60 billion down there could be right for the taking. You have that imbalance to the Bart Simpson idea to the downside. We already went over those amounts: 142, 180 billion at 24.3, and 100 billion stacks all the way below that. Also building up above: 32.1, 131 billion, 75 billion, 112 billion, 100, 100, 195. Basically 100 billion stacks up above as well. Where we start to build a narrative to the upside could be started on the 2-year time frame. So we're going to go to the 2-year real quick. So on the 2-year time frame, you have that $181 billion at 32.4, 181 at 32.8, 197 at 33.2, and 124, 33.6, 111, 34 even. Basically 100 billion pools all the way up to 36.4 now. So if we are insinuating going to the upside at some point off of some divergence on some longs, then you could be going up into these regions. You got about 600 billion up above before a true retrace is in order, in my opinion. So let's go ahead back to the monthly and see what we can to determine what's going on. Thursday midweek reversal is just around the corner. You've been seeing some Tuesday, Wednesday contradictory moves, which is interesting to note. Tuesday and Wednesday don't necessarily complement. I was expecting Wednesday to complement Tuesday and come down a little bit lower, but they went up and brought it down in the same day. So it's getting a little bit harder to read, if I'm being honest, even though we've been pretty accurate on our levels and the ABC to the downside was pretty spot on. I don't like being wrong even once if I can help it. So let's go into the charts, shall we? Point of control, by the way, of the previous range is over here at the 28K region, so this lines up with the liquidity quite nicely as a bounce idea. You definitely don't want to break this support structure and break this point of control, or you're coming right back down to the 382 and possibly all the way down to the levels at 24K and below for that Bart Simpson to play out. Let's go into the Binance chart and see what we do. Daily. Booyah. So this is actually like a little mini W formation that started to play out here. We had this double bottom coming up, and is this the retrace to continue higher? Let's find out. So these are the bearish trend-based fib levels as it stands right now. We're trying to reclaim the 786. We came all the way up to that daily range level, recovered the fair value gap over here, and wicked down into the 786 of this bearish trend-based fib level, and we're starting to determine whether we go back down into the Hail Mary play down below at the 1618 or the 2 level down here or not. Before we start to build the structure, let's turn on our oscillators and see what's going on. Heads up display is on. What is this little bit of happiness? Well, this is the link in the description, momentummaster.info. Go to features, toggle each one as you see fit. See how it looks overlaid and read each component as we bring it up into prominence. So let's go down the time frames and see how they stand at the end of the day. Starting with the daily. All right. So the daily cloud is turning bearish in a manner here and showing no signs of thinning or abating. It isn't quite as thick as it could be in terms of downside momentum. It's a very slow, steady bleed. You had this previous bearish retest of the break of the cloud and drop to the downside. You're having another attempt at it now. The baseline did cross up here on the daily time frame to close out the day with a cross up, only to get this coming back down to test the baseline again. We've seen this baseline cross down since July 2nd, so this has been a baseline cross up that is now negating this month of downside that we've seen since July 2nd in terms of overall suppression of the baselines on the daily time frame. Also looking at the double bottom oversold region of the Williams, and this starting to take off on the stochastic. Could we see a continuation pattern to the upside? Let's find out on a higher time frame. Let's go see what the 3-day is doing. The 3-day did close yesterday as well, so that 3-day also tried to stop some things into motion by bringing this up on the 3-day close off of that daily support structure. The money flow is flowing out beneath the RSI here, which is starting to insinuate at some point you will get a rise up on the 3-day time frame. We do have 2 days and 9 hours on this candle, so this could go create a double bottom event and then come out. So I'll be looking for this double bottom area for a potential long off of this cloud region, perhaps. We'll see. As we go to the higher time frame of the 5-day, 5-day closes in a day and 9 hours. We have yet to see the Williams. The money flow is starting to come up here. It could push this for a double top. The Williams is crossing the alarm level and saying it could come down lower, so watch out for that on the 5-day if you're in the short. And if we're on the daily, going back to the daily time frame, attempting to take off here on the stochastic, although going sideways as it's going up here. Are we going to see this daily candle close in 8 hours be a bullish one, or negating this and be bearish engulfing? That is a good question. All right, looking at the 22-hour. 22-hour money flow, we were talking about this morning, getting a little bit overbought in terms of being above the RSI and then starting to come down now to the RSI. So this did not hold because the money flow was above the RSI here on the 22, and you're getting overbought. So interesting to note, are we getting rejected also off of the super trend level? This super trend level / cloud rejection of the 22-hour time frame is what you always see in a fractal like nature. You see this kiss to the cloud and rejection, and if it's thick, you're more likely to reject than not. So if you're looking at Momentum Master with the 22-hour time frame, you are getting that potential thick rejection as we did not close above this. It's all subject to change in the next 6 hours, so don't take this in stride as we look at each candle close as it closes. 12-hour time frame also had some bullish divergence on the money flow here. This is one thing I noticed, and something you should take heed and notice as well. When you start to have bullish divergence like this on the money flow, it normally triggers a stop loss hunt. So you get the bullish divergence, which gets everyone to pile in, particularly the 100xers, and then they liquidate them and then go up. So if you wait for the stop loss hunt of the bullish divergence, then you're more likely to see a bounce than not. And yeah, if we go to, it's starting to double top here on the momentum for the 12-hour. It looks like we're coming back into the vector recovery zone of this 12-hour candle. Let's measure the candle real quick. So if we measure this, it is a 50% recovery bounce that we are potentially having right now, as we did not exactly hit that 0.5 level to the T just yet. But we did nearly have a 50% recovery of this vector candle here. And you're starting to see the rising sun, but it is retracing lackluster at best. If you take this to the top here and look at this as an impulse retrace idea, then we are coming back into, whoopsie daisy. I pulled it the wrong way, that's why. Oh, wait, what? All right. So we did not have the 618 bounce just yet, so we could come down lower if you are looking for those 618 bounces. You have it at 29,149, the 0.65 in the 706 regions at 29K even. Could we come down to those? We very well could in the next 12 hours. Let's go ahead and take a look at the 6-hour. 6-hour time frame getting overbought, and you did reclaim the cloud. So that cloud that we were talking about, we did put out a curvature 2 days ago, I believe, 2-3 days ago. We were talking about that rejection of the cloud due to the thickness, and this is what you want to see. You see this break through the cloud with conviction, come back and you retest the cloud, and then you're gone from that point. So this retest of the cloud after it's thinned is something to note, and it's something you see often on both sides of the trade, where you break out and you come back as it's thinning, and then you get that continuation idea. So are we going to see this continuation to the upside, breakthrough, continuation to the upside on the volume weighted cloud? What is this trend cloud? Well, it's a volume weighted cloud which expands and thins according to the amount of volume present in the asset. Unlike your EMA clouds and other stuff that other prominent streamers use, this is a volume weighted cloud formula which is ever accurate, as you see here with the rejection here, back tested to a T. So if we look at this 6-hour cloud, you are seeing the money flow come beneath the RSI here, and the KD lines are crossing, potentially bringing you down here. The Williams average line is separate from the actual Williams line. The last time you had a V-shape like that was over here, but generally you bring, if it's a genuine move, you bring the average up to it before you reverse. So if this is a disingenuous move to the upside, then you'll see this sharply reverse down, just like these cat ears over here. All right, so if we look at, take the oscillator off for a second, the juxtapose here is, where did we retrace into? So let's just be genuine with this and put the entire Fibonacci on here. It looks like we got a golden pocket bounce, but not quite off the 618 just yet. So are we going to come down to the 618 retracement of this impulse wave to the upside? That is the question. You're seeing the cloud flip in a manner here, which is what we like to see in terms of reversal ideas. And then you start to see this prominence of the cloud like this starting to curve in a manner here, suggesting that the reversal idea might be in. Let's go down to the 4-hour time frame and see how that cloud is looking. Also getting a little bit of fake outs with this price action here on the 4-hour. This is why we are seeing this downside play here, because we are seeing the 6-hour cloud rejection on the higher time frame. This is why you look at multiple time frames of information to gather your conclusion and your narrative. So the 4-hour time frame is starting to come down here alongside the 6-hour. So you're overbought on the 4-hour, overbought on the 6-hour. 12-hour is getting to be overbought, but you're getting that momentum burst potential continuation in the next 8 hours. Let's go look at the 8 hours, which is in between them. Let's see how that's doing. The 8-hour is also not showing signs of abating yet on the cloud, so you could see that suppression play. 8 hours a little bit more chaotic, but I sometimes throw it on if it's ambiguous. You can get some signal from the noise on the 8-hour. Let's go back to a time where the 8-hour was very clean when Bitcoin was not. That was here. Okay, so for the month from July 15th to July 19th, we had solid 8-hour like suppression of the baseline. So we were talking about coming lower, even though if you look at lower time frames like this, let's just go back in time and show you. All right, so if we look at the 8-hour time frame, this was a very clean suppression of the baseline cross down here, showing that we were going lower. However, if we went to the 1-hour time frame, it was complete mess. You know, you were going up and down and up and down and up and down and up and down the whole time. But overall, the 8-hour was bearish. So sometimes the one time frame will be the signal from the noise that you can extract, if you will. So that's why sometimes you got to look at these oddball time frames like the 22. 22 is that broken time frame which shows the unsyncopated rhythm. As one prominent streamer spilled the beans about that, it's been getting a weaker signal. So the more people you broadcast it to, the more it becomes used as a trap maker for traps. All right, so let's go into the hourly time frame. Hourly time frame getting suppressed here potentially by the higher time frames. Remember, we have that 4-hour and that 6-hour and that 12-hour and that 8-hour cloud suppression idea inbound, which is keeping the hourly from taking off here. You had an hourly attempt here and then get suppressed by the baseline cross down event as well. So when you have these cross down events, you like to see the baselines come beneath the price in a manner here. This is actually a perfect example. You have the baselines cross up and then they scoop up the price, and then this buyback here at midnight my time would have been a perfect entry for testing a theory of the baselines and the stochastic double bottom reset here. So we're not exactly in that position just yet. The Williams could be coming down further. When you had this gold rising sun event, that was your ideal entry, if I do say so myself, for that smooth move to the upside. Let's go ahead and see if this continuation is inbound or are we going lower. I heard there's something with the Litecoin halving on the 8th. So the 8th is normally they sell off, they buy into the news and then sell off as it happens. So it's already kind of played out in my mind. So let's just turn this to the pocket because we haven't seen it. So the 618 would be down at the 29149 region. Let's see if the liquidity lines up with that idea. So you got a $138 million pool down at 29,884, but realistically all this orange is 100 Xers, so coming down to clear the whole 100 Xers down to 28,622 seems like a valid idea unless you start to bring in more shorts like yesterday. It looks like they scared out most of the shorts. All those those overzealous 296 million, 264 million pools are missing now. So they can make their genuine move to the downside if that's the case, because I'm not seeing super large pools of shorts just yet. So the idea of coming down to this region to the 138 million and below could occur. 136, 149 still on the table here. So we could be coming down to those monthly pools that we talked about here. Okay. So I'm not sold necessarily, and even if it comes here, you should just be very careful that there is liquidity lying below for that idea. So let's go ahead and take a look at the hourly time frame once again. And you also have to fight off all these bearish overtones here because we came back beneath this range. Ideally, you want to see, this is what you want to see, okay? So normally you'd like to see this range holding. So I'm going to go to a 4-hour time frame. So normally you'd like to see this range, this box, if you will, here, be where the cloud is at, and you'd be continuing from here. And then the cloud would be coming down in a manner like this. That would be more bullish to me if you're starting to see the cloud flip and you came above it with conviction, and then now you're flipping this resistance range. But we broke back under this range. We're back in this consolidation range. So this idea of bouncing from within gets less as you have more resistance. This resistance becomes resistance again. Ideally, you want to see the support zone hold as support, which it has not done yet. So just be extremely careful, even though we did have a change of character and displacement here. So what you would be looking for would be a reaction off this golden pocket zone. So please keep that in mind as we go forward in time. So this rise retrace coming down to this region, continuation perhaps, as that 6-hour cloud shifts. The 6-hour cloud closes. 6-hour closes in 2 hours and 3 minutes. So seeing when and how that closes will be something to take note of. And that's my story, and I'm sticking to it. It is midweek reversal Thursday. They're doing their damnedest to make sure that you can't guess which side that reversal will be, because basically Monday took us to the downside, as did Tuesday. Monday, false move Monday took us up to take us down. Tuesday continued it, and Wednesday took us up and down. So it's a very confusing, non-directional week thus far. Now I'm going to go take a little bit of a detour here into the NASDAQ futures and throw on a new project of mine and go into the 1 minute and show you what was going on earlier. So we're going to go into the 2 time frame structure and look at the 30-second and show you how this was working out. All right. So let's go back in time, shall we? To the open. To the open! So we pay ourselves as we go, so thankfully we don't get trapped so often, learning from experience, of course. And so here, just prior to the open, we were looking at some bullish divergence here on 𝗥𝗲𝗹𝘁𝗲𝗱, and this was also cascading from the 30-second here. And we took that for a few 10 points, 10, 12 points, and then the open happened and we started to not hold the cloud here, get rejection off of the 1 minute cloud, and break down with fury to the downside and impulse out, leading into a tradable time here. And we are starting to see bullish divergence lead to bearish divergence, and they had this do not enter, watch out sign prior to it dropping. If you don't believe it, here's what we were putting out to the Momentum Master Discord. So we had this, while it was consolidating, we had this do not enter, watch out, and then literally 5 minutes later it dropped like a rock. And so this indicator's giving you some special sauce before it occurs, and you saw the money flow, divergence burning off here, divergence, divergence, do not enter, and we went lower. At that time, I started to draw my bearish trend-based fib levels based on this impulse retrace idea, and that started to set up for a 236 model entry into a short, and then the continuation off the resistance with it, which was also a 0.5 equilibrium of this retrace idea, and then continuing even lower. And then just as we were ending our session, we saw this bullish divergence play up to the upside and made ourselves a pretty penny off of that nice bullish divergence with the money bags down here, and played that to the upside in advance. See, we had it down here in advance at that level. When it bounced there, we had it at that level there, and all the way down to the bottom here, where we started to see the divergence play out before it played out. So it's kind of interesting. So this thing is getting pretty good. I can't reveal exactly what is in under the hood, but it's a lot. It looks very simple. I tried to make it aesthetically simple, but as we see now, we're getting some bullish divergence on multiple indicators and a money bag on another time flow here, and a reaction off of a 618 level. So are we going to get a bounce here, kind of getting class C on the 1 minute? We could be getting a negation of this or a bounce, and we see if the money flows in above this line here and get the stack or not. We've shut down, so we cannot trade this right now. We shut down NinjaTrader when we're streaming. I think it causes double audio issues with my music. I'm not quite sure why. I think it has to do with me running Windows platform on Mac and doubling up the audio cards or something. If I left it running in the background, it would always double up my audio for a few months, like a few weeks. So we're negating the divergence by creating a lower low here, so this is not playing out, getting the cross down event. You have not seen the minute time frame. Ooh, whoops. And the cool thing is it tells you you're going down and has these watch out signals prior to it happening. So this could be a stop loss hunt. You're not getting really like a huge sell off. It's not going, the money's flying away on the minute time frame. And NASDAQ is a very ruthless beast that goes very fast, faster than Bitcoin, and goes directionally in a direction which pays one or the other. One way or another, it goes down or it goes up. And even this little bounce here in a grander down trend is potentially something that can pay if you take the divergence as it appears. Very interesting. It's an interesting little thing. Gotta be fast, but you gotta be accurate, and you have to have good risk management, good control of emotions. It's a higher level of trading for sure, I would say. So it looks like the bullish divergence could be playing out. We'll see. Minute time frame not really showing it just yet. This was clearer. You had this clear divergence here, and then it cascaded here, and you could have taken that smooth to the upside, getting money flying away here. I don't normally trade outside the hours with this line between here and here. This is a smoother setup time, as you can see, more directional, more impulsive. Here is a lot. Here's an impulse, of course. Generally, when you even get to this region, though, you start to see bottoms forming. So it's whoever entered here, it's taking them for a ride, and then once they're done with taking them for a ride, it will likely shoot out here. We'll come back to it, see how it percolates at this level, this oversold region. We'll come back in a minute. Let's go to total real quick. Take a look at total. Oops. Sorry about that. Well, what are you getting? A little bit of money flow coming back in, but it's fatiguing above the RSI here. So when the bullish divergence negates itself, you could consider looking for a better entry, but for the most part, when you get below this level, you don't really see lower than that. It eventually bounces out. So you could be seeing a bounce here at some point, giving some shorts some squeeze a little bit. No bullish divergence on the 1 minute though. You had this previous 30-second one that got negated. Not seeing the volume step up to the plate here on either end. This is just a drift to liquidate some longs, getting some bearish divergence with the burning of the money bag here. This money bag got burnt up here. Now you're starting to see some upside potential. Starting to round out a little bit here. Getting the money flow coming back in. Stacks are appearing. So we could see this stack go to the upside here. You're getting the up finger saying ready to go on lower time frames. And yeah, getting a double stack here on the 30-second and the 1 minute. So it could be starting to round out something, some juiciness. Oh, hey, what's up? Would having both options, long and short positions with stop loss and take profit, wouldn't that be a guarantee with any measured move, especially ones that are VRP and point fixed? Good point. I was talking to my friend about that the other day. Yes, if you are at a consolidation point and you have a tight stop and you just let it run, but the problem is sometimes they go in both directions to trigger stop hunts, and that's what consolidation is about, like this. So let's say you went short, or you went long and short here, then you'd get your stop on your long hit, and then your stop on your short hit, and like when do you take profits. So you have to have like a narrative, if you will. So that's why like I didn't enter into, I wasn't watching this and setting this up prior to entry, so this is not how I would actually trade. I wouldn't just spontaneously go to NASDAQ and start trading it like I am paper trading in my mind, out narrating right now with. Granted, I have these bullish divergences and these levels that I would be interested in, but I would be looking at things with Fibonacci beforehand, similar to here, what I went over before. So we had this impulse to the downside. I did not take this trade. I took this little point scalp, this little bit of point scalp off this bullish divergence here, 12 points or so. Then I took my profits and left a runner that got stopped out, and then I didn't take this and I didn't take that, and then I waited for the narrative. And so the narrative was the bearish one because they had taken some longs for a ride here. So the idea is you had a liquidity grab, stop loss hunt, whatever you want to call it, and the longs that are trapped want to get out, so they DCA their way in here, but they have no intention of letting them out. And this DCA is the B wave. So if we just get into a bigger thing here so I can show you something and get out of the oscillator because it's not important right now, and show you what's happening here. So here's the A wave, the liquidity grab. All right, and then all of this junk consolidation is a B wave. So it went up to here, right? And then junk consolidation, just trapping more longs and getting these guys up here that are trapped to DCA, only to go to a C to the downside and see you later. And it basically comes to that region. And so if you use that bearish trend-based fib level and you do that impulse retrace idea, impulse retrace, this impulse retrace within this wave, in this correction B wave, that tells you the math. So how long that impulse was gives you a narrative, and in this case the narrative math was here. And so as we were entering into this thing, I was saying, okay, if we hold this 236, we're coming down to that one region and below, and then boom, we hit the one region. Okay, and then so yeah, do I have, if it hits my stop on the, would I go long there? Not necessarily, because I had already created a narrative, but you could take these scalps if you're so inclined. But if the general gist is they've changed market structure to hook some longs, then the idea is looking for that continuation short. And then down, when you get to the utter bottom, then you look for these potential bounces on these higher time frame narratives. So it's about creating a narrative and then doing the narrative thing beyond that. But hedging, I mean, normally you would hedge, you'd take a short at some other region and a long at another region, and not at the same exact point, because the thing you're seeing would be different at that point in time. I wouldn't want to short a bottom, for example, a potential bottom, if you will. So what is this level that I'm looking at here? What is this 618 that we're bouncing off of? Okay, so there's this grander impulse here, this larger hourly impulse at 15,444 that we're looking to bounce, that we didn't bounce off of, that we're breaking into this golden pocket on, and that's where we are standing. So we're into this pocket region. We broke this 618 of that, and we're kind of going into this zone here. I changed the color recently because having them the same color as this blue confuses me now. So having the purple tells me that's the 0.65, 0.66 region. So you could see the actual bounce come into play here. But yeah, to answer your question, long story short, you could, if you have a level where you would be looking to put your stop loss on both ends of the trade where they wouldn't take them, then one would pay, but you'd also have to have your take profit set too. And with NASDAQ, you take the small moves and you move on. You compound is the idea. So taking 6 points, 10 points is a good thing, and moving on. And a win is a win. So yeah, you're seeing the money flow divergence here start to pick up steam a little bit, but money's flying away, so you could get another grab here on NAS. We'll come back to see how it reacts off this level. Ultimately, you're bearish though, because the American government got downgraded from AAA to AA. So that is kind of why the bearish narrative might be playing out here. But good question. Thank you for the question. Hedging. Ideally, you'd want to have like a short at the resistance level and a long down here. So if you're in terms of hedging it, you're hedging like a range, and range bound you're hedging it. And so your stop loss for your short would be up here, and the stop loss for your long would be down here, and you're waiting for one to play out, a la 𝗥𝗲𝗋𝗃 style. So 𝗥𝗲𝗋𝗃 has shorts up here and other longs down here, but he doesn't have them at the same point in the charts. I know you didn't say that, but I was just trying to be clear about it. But yeah, hedging is a good thing, and then trimming and rewarding yourself to cover the fees and whatnot, and moving the stop loss to break even so you win even when you lose. It's a smart idea, I think. So my regular indicators. At some stage though, you could see a little hourly bounce. 𝗥𝗲𝗃𝗁, the money flow is beneath the RSI. This is not my alignment, quote unquote. Technically yesterday was my alignment, but I was sleeping. Sadly, I missed this. But you had bullish divergence on both the RSI and the money flow and the rising sun, so this was a smooth move out the bottom of the Keltner channel too. This was a great setup. Did you guys have any questions while you have me? Let's see what the 2 hour is doing. Hour and 45 minutes for the 2 hour. 4 hour. 4 hour is also in what? 3 hours, 4. So that closed too just now. Huh, interesting. So it's the 6 hour we're waiting on, in an hour and 44 minutes. What does the 6 hour do with this cloud flip situation? Does it play you on both sides like a fiddle, like the 4 hour did, where it goes up and it goes down and then goes up again? Does it play this weird meandering on the 6 hour as well? Or does it play with conviction to the upside? At some point you load around in the chamber and test a theory. We unfortunately did this during the FOMC back here for the long, and were in profit and got juked out by the not wanting to be in during the news play. But the math doesn't care about the news. Cross-up event on the 8 hour is interesting to note. 6 hour. 6 hour also has a cross-up event too, so you're starting to get the cross-up, not to be ignored. I always say that each time, not to ignore the cross-up events. They do play out with some conviction to that direction they are in. Just as we had this cross down here and it continued, and this cross up here and it continued, cross down here and it continued. Is this cross up here going to continue to the upside? 6 hour cross-up events are powerful things. If we go to the 12 hour, we have been crossed up and we held the baselines here, and that's why we saw this move to the upside. It's a very subtle one, but the 12 hour does also do its thing when it does. If you look at the 22 hour time frame, 22 hours been crossed up and you're holding the baselines here. So if we start to close candles within that structure, rising sun still in effect, taking off ever so slightly here. So the basically in 2 6-hour candle closes, you will have both the 22s closed as well. All right, it's been a hard read to predict where it's going to be in a day's time because it goes in so many directions in that time, or goes just nowhere. It either goes up and down and essentially went nowhere, or just goes sideways these days. Very, very hard to get directional movement. Although we've been pretty accurate thus far in the past week or so. We missed yesterday's play. The longer term play anyway. We saw that pool getting snatched up at least. If you took that alone, you would have been up massive. So that's my story. I'm sticking to it. Are we coming down to the golden pocket and seeing a bounce off the 6.5, 6.6, getting wicked down in here? If bullish, that's what you're going to see. If you're going to see some midweek reversal shenanigans and go lower, you have these levels down here at the 28.120 level, the adaptive on the 12-hour. The thick cloud on the 12-hour is starting to curve ever so slightly, but you're getting rejected as of this moment. And you have the liquidity down at this region, suggesting you could come to 29K and below with all the 100 extras here. Very thin, sparse shorts, so coming to liquidate the longs would be something we can see. 28.4, 28.3, 28.2, 28.1 also have the liquidity to match that on the monthly time frame. So if you get that ability to enter off of here, maybe you get some nice divergence play. It is midweek reversal once again, followed by Run for Profit Friday. So how will we close out the week? Should be interesting to note. We'll keep you posted. And that's my story, and I'm sticking to it, folks. We thank you for your time, so we will let you go. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.